My name is Drew Smith. I am a licensed loan officer at Military Home Spot Lending. I specialize in VA loans, and I want to take some time here to really go over it in depth and in detail. I'll go over some of the high-level stuff, things that I get a lot of questions about, and then I'll go over some more of the subtle nuances. And this is coming from a loan officer. I specialize in VA loans. I do have quite a bit of experience. My NMLS number is behind me, number 2113580. Of course, I will link to everything in the description of this video as well. With that same comment in mind, if I mention a website or anything like that, I will also put links to it. I'll put links to resources as well. I'm going to be talking about the VA handbook and referencing a lot, so you can find a link to the VA handbook, which I will be discussing here in detail. So the first thing that I want to go over and talk about is the difference between lenders, because there's a lot of information out there. I get questions every day about minimum credit score requirements and things like that. So every lender is different. The best analogy that I can come up with is every lender is like a restaurant. You've got one that's a hamburger restaurant, you've got a taco restaurant. If you go into the hamburger restaurant and you ask for a taco and they tell you, well, sorry, we don't have tacos, it doesn't mean tacos don't exist. It just means that that specific business does not have them, all right? So I know we're not talking about food, I know we're talking about loans, but in that sense, keep that in mind. All lenders are different. I'm going to be talking about manual underwrite VA loans. You just need to find a lender that can do that. Good news, you already found one, so if you have any questions, feel free to reach out to me. I will also be going through the comments, so if you have any questions, I will do my best to answer every question that I get. So continuing with my bad or good analogy, however you're looking at it, just because the VA handbook puts out these guidelines doesn't mean that other lenders can't add what's called an overlay. So what the VA does is it's published and produced this VA handbook, and it says, hey, if you, the lender, the bank, the broker, if you write your loans to these guidelines, we will guarantee that loan for you in case there's a default. It is, in essence, an insurance policy. It's encouragement. It's protection for the lender in case the borrower doesn't pay and they go into default. Now, that doesn't mean that a lender can't add or ask for more in addition to what the VA handbook says. So that's why you will see a lot of minimum credit score requirements. Even though the VA doesn't have it, other lenders can require it. So that's my first topic here. I'm talking about credit score. I answer this all day, every day, pretty much it feels like. There is no minimum credit score requirement on a VA loan per the VA guidelines. You can actually go into the VA handbook, Chapter 4, Topic 7. It says it right there in a very clear sentence, no minimum credit score requirement. The next big thing that we look at is debt to income ratio. So other loan programs are around the 40%. You can go a little bit higher. You know, with every loan, you're looking at compensating factors, so it is really unique to each individual. But typically, it's around the 40% range for debt to income ratio. On a VA loan, technically, there is no debt to income ratio limit, but the loan has to make sense. So with the VA loan, they do look at your residual income and some of your other obligations, such as child care, any other things that you might have in there, student loan debt. So all of this stuff is calculated. And when all said and done on your VA loan, you have to have enough residual income to cover some of those expenses. But if you make enough money and your situation is good, there is no real limit on your debt to income ratio. Now, a loan limit, how much can you buy, or what is the potential that you could borrow? There is no loan limit. If you qualify for the monthly payment, you could buy that house. So there is no loan limit, okay? Down payment. So other loan programs, they might ask for you to put 3% down, 3.5%, 5%, 10% sometimes, or more. But with the VA home loan, there is no down payment requirement. However, that doesn't mean that there's no cost involved. So you've got two types of costs with the home. Of course, you've got the down payment, then you've got closing costs. Now, closing costs are all of the fees associated with it. So it's going to be your lender fees, any fees that they may charge for underwriting, processing. Then you're going to have third-party fees. So you'll have title fees and estate recording fees. You're going to have an appraisal, and then you'll do anything on your own outside of kind of the loan contract for an inspection. Okay, so closing costs, if we're breaking that down even more, your closing costs include your escrow account. Most lenders, and most other lenders in the qualified mortgage space, when you're looking at a VA loan, are going to require that you escrow your taxes and homeowners insurance. Your escrow account is essentially a bank account set up with your lender. Every month, as part of your monthly mortgage payment, they put a portion of that into this account that is going to pay for homeowners insurance and property taxes. Now, at the time of closing, you're going to pay your first year's premium up front on your homeowners insurance, so that's 12 months right there. Then you'll want to have 2 months in reserves, so that's 14 months essentially in your homeowners insurance. And then you also have property taxes. So depending on where you are, what county you're in, property taxes have a big range of how expensive or inexpensive they can be depending on what state you're in. So there's a huge range there as far as what property taxes could end up costing. And then of course, when they're due, ranges from county to county. So those are your closing costs in a nutshell, right? So you've got all of those that will be due at closing as well. Now, just a kind of side note, in the market that we're in right now, it's drastically changed from a year ago. We are getting seller concessions, so it is possible to use a VA loan right now to get into a home with little or reduced cost or out-of-pocket cost. In some cases, I've been able to do it for a couple $1,000s. Now, that is dependent on the circumstance and what we can get in seller concessions. I can't promise that for everybody, but it is something we are getting in this market at the time of recording this in early 2023. Funding fee. So with the VA loan, the VA charges what's called a funding fee. It's not a lender fee. It is disclosed within your loan, but it goes right to the VA. And the VA says that they do it to reduce the cost for consumers, and it is assessed on every VA loan unless you have a VA disability rating from the VA of 10% or greater. You are waived from that funding fee. And then it is a percentage of the loan amount. On your first time purchase, it is 2.3%. On any subsequent purchase, so any purchase after that first one, it is 3.6%. Now you can reduce that funding fee if you put 5% down. It does reduce that fee. And then again, it gets reduced if you put 10% down. So that is assessed at the total loan amount at closing. It can be financed, so you don't have to pay for that funding fee at closing. It can be rolled into the loan. It is financeable. So that's the funding fee. So who's eligible or who's entitled to a VA loan? Typically, on the VA website, you can go to the va.gov website, and it states that if you served 90 days consecutive, consecutive 90 days with no breaks, you are eligible, or if you served 6 years qualifying reservist, okay? Now, there are different years that people served and different kind of standards with that. We can always check if you're eligible. There's a website that you can submit your information. Every lender can help you out in that as well. I can help you out in that aspect as well. We basically have a third-party website that we can go to as lenders, put your information in, and request your COE. Sometimes we do get letters back that say, hey, based on the information you provided us, you are not eligible. Please provide us with more information. So you do get to go back. So if you're a reservist, you get activated, or every time you kind of go through your training, you will get a discharge paperwork every time. So sometimes maybe we just didn't put all the paperwork in there that shows that you have your entitlement. So it could be as simple as that sometimes, okay? Typically, you're looking at an honorable discharge. If you were discharged with less than honorable, it kind of just depends on how long you served and what that circumstance was. I have seen VA borrowers that were other than honorable discharge, but still had entitlement for a VA loan. Really kind of case by case. So what is the VA loan used for? It is a primary residence only, and who can actually be on that loan with you? So it's a primary residence. At the time of closing, you do sign a piece of paper saying that you intend to occupy the home. So you can't use it to buy an investment property in another state or another county. There are circumstances where you might be looking at buying the home. Your spouse can go ahead and occupy the home to fulfill that primary residence status guideline there. So if you're deployed, you can buy a home. Your spouse can occupy the home for you in that primary residence aspect. Who can use the VA loan? So right now, at the time of this recording, the VA loan is limited to the veteran and their legally married spouse and or another veteran. So if you're dating somebody or you're engaged, you can't buy the home together and have that other person on the loan until you are legally married. But if you have a friend or somebody else who is a veteran, you guys can buy a home together. You would split your entitlement when you purchase that home together. VA appraisal. So VA appraisals get a hard rap. They are looked at as a more strict or harder to use, harder to qualify. The VA appraisal has a standard. When they're looking at the property, they know that the veteran is going to be using this as their primary residence. So the standard is the home needs to be safe, sound, and sanitary. The big items that they're looking at are the roof, gutters, paint, flooring, wall coverings, doors, windows. So the roof has to be in good condition. Now, the appraiser's not going to get up there and do a full inspection, but if they can see and it's obvious that the roof is in disrepair, that could be an issue. If gutters are hanging off the side of the house, if there's a lot of chipped paint, that can be an issue. Now, windows that might be broken, missing doors, a missing deck. There is a standard on stairs and safety. So if you've got more than 2 stairs down, typically there needs to be a handrail. The floors have to have coverings, so that has to have carpet. It can't have exposed subfloor. And the walls have to have coverings as well. It can't have 2x4s and exposed wires. So as long as the house is in livable condition, you should be good. Now, it doesn't have to be up to date and fancy and new. It just has to be safe and livable. So those are the big things that we come into that can be a problem when you're looking at a VA loan. But it doesn't disqualify everything. Those items can get fixed. Then the appraiser can go out there, reassess it. As long as those items are fixed, you should be good. In some cases, they can be scheduled to be fixed, right? So that's usually when it comes to the roof. A lot of times you can have that contractor send you that agreement that they are going to be fixing the roof on such and such date. That would be good enough in some cases. Again, it's kind of case by case, but I look at this as a good thing. I know that my borrower is looking at the house they're going to potentially be living there with their family. I like the fact that the VA appraiser is going to give it a little bit more strict of a look because it protects my borrowers that house is in good condition for them. So, you can look at it both ways as a pro or a con. I look at it as a benefit because it has that extra standard to make sure that the home is livable. Now let's talk about VA disability income. So if you've got a 10% or greater rating from the VA, you will get a monthly award of whatever that amount is. It's dependent on your circumstance, right? If you have kids or dependents, but you get your VA disability income. That is a lifetime benefit, and we can use that for qualifying income. I've gotten borrowers into homes on just that income without any other work or any other income type, just using that VA disability income. Now, it is non-taxable income, so at the time of this recording, we can gross it up 25% because it's non-taxable, so you can bump it up a little bit as if it were taxable income. That can help us in our debt to income ratio. Maybe if we're looking to qualify for a little bit higher purchase price, sometimes we can use that to bump up our income. It does help us. But again, it is a lifetime award, and we can use that as qualifying income. Typically, the income guidelines, we're looking at 2 years history. W-2 income we can pretty much use immediately. If you have a self-employed job, we need to have tax returns for the last 2 years to use that as income, and we'll average that amount over the last 2 years. So keep that in mind. Typically, we want 2 years work history. Now, you can use schooling as work history. So if you went to school to be a nurse or an electrician, whatever the case may be, you can use that time for your education as qualifying work history when you start in that career field. Student loan debt and other debts how do we calculate those monthly payments? So student loan debt is calculated as a monthly payment. This comes up a lot, and we have questions about student loan debt, so that's why I'm taking some time to answer it. There's two ways that we can calculate your student loan debt income, and that is if there is a monthly payment on it. So if you're already in a payment plan, that's the number that we would use as your monthly payment for student loan debt. If there is no monthly payment on it, and we look at the credit report and it says 0, then we have a calculation. We take 5% divided by 12. So you take the total loan amount that you have in student loan debt, you multiply it by 5%, 0.05, and then you divide it by 12, and whatever number that is the monthly payment that we would add to your debt to income ratio. Now, if your student loan debt is deferred 12 months or more at the time of closing or when you close on the house, we actually don't have to calculate it as student loan or as a debt. We can omit it from our DTI or debt to income ratio. Finally, another big question I get is, if you don't have a minimum credit score requirement, why do you need a credit report? That's a good question. Now, just because we don't have a minimum credit score requirement, whatever we're going to run that report. Whatever number comes back is irrelevant to you qualifying or not. It could be 2. If you have a 2 credit score, you can still qualify for a VA loan, right? There's no minimum credit score requirement, but we're still going to look at that credit report and calculate those debts into your DTI. Then there is some performance guidelines within the VA handbook. So we're looking at the last 12 months. Typically, no late payments, derogatory accounts, charge-offs, judgments, or liens, bankruptcies in the last 12 months, you should be good to go. So those are a lot of the common questions that I get when it comes to VA loans. Maybe that left you with more questions. Feel free to reach out to me. I'm always up for a conversation and available to answer questions. Again, my name is Drew Smith. I'm a licensed loan officer at Military Home Spot Lending. Feel free to check back in. I will be answering questions and going over more stuff. So however you want to do that, whether it's like and subscribe, or just be sure to remember this channel here to come back and visit. Other than that, let me know if you have any questions. My name is Drew Smith. I'll see you in the next one.